Warm greetings, ladies and gentlemen. Thank you for being here today, for giving me your attention. I promise to do my best to make this the most valuable information that you'll get today, and that it'll be the most actionable to help you survive and thrive in the economic chaos which is already upon us. I'm here to discuss the problems that we face and how we might navigate those risks that are facing us, and so there's not going to be any sugarcoating. We've got to recognize reality for what it is, and with foresight and proper planning, we can succeed when everyone around us is failing. Not only will we discuss alternative assets as an escape from deflationary and risk-filled markets, but also alternative systems, which we must make proper use of if we're going to survive the current devolution of the world as we currently know it. So with this in mind, I'd like to offer my most sincere condolences to our dear friends in the banking industry who are really doing their best to keep a smile on their face and keep the violins playing on the deck of the ship of their traditional banking industry while it commits a slow suicide. Let me explain what I mean by that by sharing just a few of my own personal experiences. I was involved with a U.S. limited liability company based in the U.S. bank account. I live in Panama, using the debit card for just normal expenses here and there as they were needed for travel and operational expenses. The bank in the U.S. deemed this international use of the debit card to be risky activity. And in their de-risking process, they decided just to shut the account. In the U.S., quite often this is the case. Well, if it's international, we don't understand that so well, so, it could be anything, so we're just shut off the spigot. Account closed. Another corporate account, a Georgia company in a Georgian bank, prominent bank, Bank of Georgia. Go to the internet one day, try to log in, nothing, no information, no balances, no movements, no nothing, just blank. Do a little investigation. And basically, we decided to close your account. Oh, geez, thanks for the notice. You don't send an email. You don't send any kind of advice or notice. Why is it closed? Well, the bank changed their policy, and they just decided not to do business with companies, even if they're local Georgian companies, that have foreign owners. Don't want to deal with foreign owners. Well, in this global society, what kind of an idiotic philosophy is that? So basically they said, okay, well, whatever, come get your money. Yeah, thanks. We're in Panama. We're just going to drop in over in Georgia and just pick it up anytime. Absolutely ridiculous. No excuse for this kind of lunacy. All right, so then I've got a client who's a retired employee with the United Nations in New York. Got an account with the Federal Credit Union for UN employees and wants to make a transfer. It's not too big, but it is larger than perhaps some. It was about $100,000, and they didn't send it. So he asked why. Well, we got all these questions. So here's a long list of questions. So she goes, gets everything together, comes back with the paperwork, answers all the questions. Full transparency. Here's what it is, here's who it is, here's what it's for, here's the contracts, here's this, that, and everything else. Long story short, back and forth for a week. No, we're not going to do the wire. In your best interest, we think it's a scam, and we want to protect you. So we're not going to let you decide what to do with your money. We'll decide that for you, is what it comes down to. Are you as appalled as I am at that kind of an attitude? All right, so then we want to send a wire to an individual to cover an invoice for professional services. All right, the wire goes out from a Caribbean bank. It's going to a European bank. And the correspondent bank was Commerce Bank in Germany, and the wire didn't go through, never arrived. So we investigate. The sending bank did their own investigation with the correspondent. Hey, what's going on here? And bottom line, long story short, well, we didn't want to send it to this person. We saw some information on the internet that we didn't think was very good, and so we're not going to send it to this person. Oh, geez, well, thanks for deciding who we can and cannot send money to. So, the originating bank came back and asked questions prior to this, and, all the necessary information was provided, full transparency. You got, that's the only way to go these days if you want to deal with banks. But even that wasn't enough. They just decided, no, we don't want to send it to this person. All right. Next case, closed account. I was sick and tired of the piss poor service I was getting from one bank, and I'll name the bank. It's K-Bank International in Belize. Piss poor service. I said, I want nothing more to do with this bank. I'm closing this account. Send me my money. How long did I wait to get my money? Can you imagine? 10 months. Finally, after 10 months of back and forth, false promises, lies, excuses, just absolutely ridiculous crap, one thing after another, 10 months of this, and finally, we get the money back. Now think about the damage this does to your professional image. When you cannot access your funds, you cannot perform as you thought you were able to perform. You cannot complete contracts. You cannot be a reliable trading partner when you can't access your own funds. Think about your professional image and what that does to you, not to mention the opportunity cost for not having those funds. How many times could you roll those funds over doing transactions and generating profits, during that 10 months if you had those funds available? Absolutely inexcusable. Then we had a small credit union in Montana for a trust account there. Wanted to do some real estate projects, and we made a point in the very beginning. All right, so at what point do we need to give a pre-advice on a wire if it's coming in any kind of a large amount? And they said, oh, no worries, you can send any amount. Don't worry, it'll go right through. Doesn't matter what the amount is. If it's a bank wire transfer, any amount, no problem. So we didn't believe him, and so when we had a pending transfer of a little over $2 million, we wanted to give them all the information they needed so it would go through without a hitch, right? Do all the KYC, what's it for, who's involved, all the things that they're going to want to know. All right, so we wanted to do that, and as soon as they heard the figure, $2.1 million, they thought about it, and later that afternoon they came back, oh, we're going to close the account. Yeah, the manager of the credit union said, I'm not comfortable with that. It's going to throw our ratios way out of whack. Well, wait a minute, what ratios? 2 weeks ago, you said there's no problem. No problem with ratios back then. Why now? They just lie to you. You can't trust a word they say. There's other accounts, certain countries are not welcome in certain other countries. I could go on. I only have so much time, so I don't want to waste it all. But you get the idea, all right? They're doing KYC not only on you as the client when you open the account, but now the banks are doing KYC on all the people you do business with, and it's 100 questions every time you want to send a wire transfer. So what's this all about? Well, the banks say it's an effort at de-risking. Well, in my opinion, here's what I think. I'm going to tell you. It's quite obvious that the intent from the central bankers and the globalists controlling the monetary and banking systems is to force compliance to their standards. The OECD has been doing it for years, with the standards they're trying to enforce on everybody else in the world. So in other words, we want you to conduct your national banking policy, your tax regime, your disclosure requirements, your company, your life, the way we want you to. If not, okay, you simply won't do banking. That's the way it looks to me. So they're trying to force compliance to their standards and their system. And you know what? The result is this. Rather than forcing people to submit and come to them on their knees, people are looking for and in fact creating alternatives. Hey, my friend, freedom will never be suppressed for long. And so today, my focus is on freedom, and that's what I'd like to talk about today. All right? So I have a short time. I'm going to breeze through my slides very quick, but the bank heads are warning us of a looming liquidity crisis. Well, it's not looming, folks. It's already here. When you can't get a wire out of your own account, the bank is stalling for time. They don't want to let go of those funds. That's going to throw their ratios out of whack because they're running on such thin, razor-thin margins for their reserve requirements. Okay? So it's not looming. This is already here. The walk of shame, overnight lending. You've probably read about it if you pay any attention to the financial markets here just recently. You know, the banks routinely borrow money from each other with overnight lending. They do this if they have certain obligations, payments they have to make, debt obligations, tax payments that they don't have quite the liquidity to make for the next day. They'll borrow from another bank overnight. They'll do this to keep their ratios in line, all right? And this is pretty typical. Now, when the bank can't get the money from other banks, then they go to the Fed window, the Federal Reserve. And this is what they call the walk of shame. You know, if you have to go to the Fed window, you know, there's something wrong with you, right? This is the source of last resort, you know, for banks that just are desperate, can't get it anywhere else. Over the last month or so, the Fed has been cranking out over $50 billion per night in overnight lending. Projections are that between now and the end of the year, which is almost upon us, they're going to pump out over $400 billion in this overnight lending. So what is that? Is this QE? Is this a bank bailout? They're pushing money into the market. You know, they're feeding the bubbles. This is what creates the bubbles. An excess supply of money in the market, easy money. People spend freely, pushes the prices up beyond where they should be. And at some point in time, that bubble bursts, prices come crashing down, and people are losers everywhere. This increases unserviceable debt and accelerates the ultimate collapse. This is the repo market we're talking about, you know, and this is a sign of much deeper problems. There is a liquidity crisis going on right now, and we're in the middle of a bank bailout. It's happening already, okay? The IMF tells us that Deutsche Bank is the biggest threat to the global financial system. They report that, you know, one of the largest financial institutions in the world appears to be the most important net contributor to systemic risks. And they're followed by HSBC and Credit Suisse. All right, this is done within the scope of their financial sector assessment program. And they've also said that the German banking system poses a greater threat of contagion externally rather than internally. And this is the issue. It's not just a Deutsche Bank issue. Deutsche Bank has tentacles reaching to and through the financial institutions around the world. It's a global network. What happens to Deutsche Bank will happen to the global banking and financial community. Okay, they failed their stress test. This is what the Federal Reserve does to test a bank's ability to withstand and weather economic downturns. So what they're saying is if we have an economic downturn, watch out, Deutsche Bank. 3 other major banks in the U.S. were also deficient in this stress test. They're telling us out in the open, European banking could trigger the next global crisis. And again, with the interrelationships that exist in the financial networks worldwide, it's not, the problems of one bank are not going to be isolated to that bank. Okay? Here we have Commerce Bank telling us, oh, a real estate bubble is a real possibility. They won't tell you straight on, hey, bud, this is a real serious problem. They don't want to scare you. They're letting you know in a subtle way, rather than just saying, you know, hey, we got a problem. They're saying, well, you know, it's a possibility, could happen. Weak. They won't confront it on and scare people. All right. Then we get to negative yields. What's this telling us? They're telling us, don't give us your money. You need to spend it to prop up the collapsing economy, cover up for our failed monetary policies and fake fiat currency, which is self-destructing as it always does historically. Okay? Negative yields represent capital destruction. Put your money here and it shrinks. Put in $100, you get back 96. Well, isn't that nice? Whatever happened to earning interest on the use of someone else's money, the premium you pay for the use? It's completely inverted and upside down and just absolutely insane. So, positive yields are capital creation. Historically, on average, we've been able to get risk-free 7% return on our money. Just parking it somewhere in a CD, an annuity, some kind of instrument, the bank, whatever. Okay? Put your money here, earn a decent rate of interest. Okay? What that does, it builds up saving. It creates an incentive for savings and investment. That savings creates surplus in the bank. The banks can leverage that surplus and pump money into the economy in credit and loans. And that supports a healthy, growing economy. Negative yields represent capital destruction. So when you see negative yields, you know the system is collapsing and you'd better take cover. Does that make sense? All right, we need to talk about bank bail-ins. After the crisis in 2008, there was a large cry, hey, we're not going to do any more taxpayer bailouts. Taxpayers aren't going to bail out these rich bankers anymore. That's intolerable. So instead, banks have changed the rules where they have access to all the money they need to cover for their bad management and bad casino bets. They've got your money. That's right. The depositors will pay. So your deposit is no longer your money. It's the bank's. When you make that deposit, you're merely an unsecured creditor. When the bank goes under, your deposits will be paid out right along with the claims for the invoices submitted by the window washers and the maintenance people. How's that for a nice, warm, fuzzy feeling? Not really, huh? Okay, so what do we do about this? What's the solution? It's very simple. Start educating yourself on the alternatives to the status quo, which is crumbling around us. And to get different results, you're going to need to do something different from all the people around you who are going to burn from the economic ignorance they have when things start collapsing. So you've got to start thinking out of the box and contrary, really, to everything you thought you knew and have been taught your whole life. That's not an easy task. We're programmed. We have to deprogram ourselves. So let me lay it out for you what we're doing in our own small way. All right, privacy is a prerequisite to security. Without security, you cannot have long-lasting prosperity. Ignorant people will say, well, why do you need privacy if you have nothing to hide? You've heard that, right? My answer to that is this. What do I have to hide? I'm not doing anything improper, but you know what? I've got everything to hide. Are you kidding? Why? Because it's my business, and my business is none of your business. All right? Let's just say that I knew of your internet habits, which were compromising politically or otherwise. Let's just say that I knew where you worked, where you banked, how much was in your bank account. I knew the equity in your home, your salary, the medications your wife was taking, and I knew about her medical and psychological condition. I knew about the behavioral problems your kid was having. And you know what? I even had your kid repeating to me what you talk about in your home, never thinking it would be repeated. That's happening right now with schools, doctors, medical people. Everything is being collected and going into a database. Now, you don't know me, you don't know my motivations, you don't know my agenda or who I work for. How secure would you feel with me knowing all these things? I could turn your life upside down in a heartbeat with that information and ruin you without you ever committing a crime or even thinking about it. You don't have to do anything wrong. Hey, tell us everything. What do you have to hide? You know, this is political correctness at its worst. And they're using this to shame people into forming thought processes that are different than what have been traditionally taught to us. Fools is what they are, fools. All right, so to prosper in this crazy world where everything is upside down, you have to think differently and you have to act. Disasters don't wait for you to be ready. You understand? So where are you right now? All right, you could be a young, working, productive career-minded individual. You could be a business owner or a successful professional. You might be middle-aged, worried a little bit about meeting your financial goals where the numbers aren't quite adding up. You might be approaching retirement. And again, the numbers just don't add up very well. Your retirement plan is not doing much of anything, which is the case in many parts of the world. Okay? So here's the modus operandi of MMG. Typically, we'll create a special purpose vehicle in the form of a trust. We'll invest assets into that trust, and from that trust, which do well in normal conditions and thrive in chaotic conditions, and that provides absolute privacy, protection, and tax-free growth. All right, now this special purpose vehicle is not your typical statutory trust. It's a very special animal, and we don't have time to get into that now, but simply make a mental note. This is not a statutory trust, okay? We'll use that term just for simplicity. So here you are, pegged to your assets. Anybody who wants to get after you knows that you've got assets, right? The tax man is coming after you. He goes after you and your assets. A soon-to-be ex-spouse is going after you. That's you and your assets. All right, the regulators have come up with some fines for you. They're going after you and your assets. Okay, the local municipality wants their real estate taxes. They could go after you and your assets. So you get the idea. The world is full of predators, and they will go after you, especially when you have assets. And it's all matter of public record. Hey, what do you have to hide? Show us what you got. Okay, so you need to separate yourself from those assets, put them into a special purpose vehicle in another jurisdiction, which is managed by yourself as appointed as manager, so you have your hands on the pulse of the daily business activity. However, it's overseen and protected by a trustee, which is in a third jurisdiction. That trustee, based on instructions from the management, which is you, can then set up accounts in various international institutions and accounts around the world and develop an international investment portfolio, which is completely immune and can grow tax-free. Okay? That's the gist of it. Pretty simple. So again, in a little bit more detail, you and your money can either go through or around the bank, exchange declining value fiat currency into assets that will hold their value, if not appreciate substantially, put those into a private vault where you might have a private account and the trustee might also have an account. And then you can exchange assets or value between your private account and the trustee account as your personal needs dictate. Okay? For those that the trustee manages, that is done through the private trust, and from there a diversified tax-free portfolio can be developed. And these are some of the things that we get involved in. Don't have time to get into those right now, but let me just tell you about one. Cryptocurrencies. Here's very interesting analysis of Bitcoin. Now, I know some people, they cry, oh, Bitcoin, that's not a replacement for monetary value. The volatility is too much. It's not stable enough. And let's just take a look at this. Let me show you this. You probably know about dollar cost averaging. You take a certain amount of fiat currency and you make purchases with that at regular intervals. Okay, so in this example, we're purchasing $100 of Bitcoin on a monthly basis over 3 years, based on the historical price levels of Bitcoin. All right, and if we did that, we can compare that here against the Dow Jones Industrial Averages. Let's say you had a hedge fund or a mutual fund pegged to the Dow Jones. All right, it would perform accordingly. Or gold. Now, if you did dollar cost averaging at $100 a month with your Dow Jones fund, you would have gained not quite 11% total over those 3 years. Okay? Gold didn't do that good, honestly. Gold has been quite flat the last 3 years. You did about less than 6% in gold. On Bitcoin, with the highs and the lows and the ups and the downs, you would have accumulated 182% gain over those 3 years with just some simple dollar cost averaging. Okay, that gives you a relative perspective on the value of one alternative asset, okay, of several. Fintech is fascinating. Fintech, financial technology, is changing the way we live and will do business. It's really changing the paradigms. Here's one I'll share with you. Arbitrage trading of Bitcoin through an artificial intelligence system doing arbitrage trading. If you're not familiar with that term, arbitrage trading, this is not standard trading done with fundamental or technical analysis, where the trader just tries to make a prediction and put a position in the market and hope it turns out. Arbitrage is an automatic, instantaneous analysis done in microseconds between the prices of different exchanges. And when there's a variance in those prices, the arbitrage trading system will instantaneously make a purchase at the low price and sell it at the higher price. And this will be done in a microsecond, and the difference could be, minuscule, but this goes on, perhaps thousands of times during the day, and these add up. In arbitrage trading, you simply don't have losing trades like you do in standard trading. All right? This has a 99.9% accuracy. Only because they can't say 100%, you have to account for something for the unexpected. Okay? Every trade in arbitrage is profitable. And this artificial intelligence program trades 24 hours a day, 7 days a week, 365 days a year. All right? Averaging 6 to 12% per month. And there's a very simple strategy that allows us to raise that up to around 20% per month. That's been historical averages, okay? And I can show you that on my cell phone here next time if you want to come up and see me. Okay, now, private, Swiss, non-bank, what's that? What's a non-bank? The World Bank and IMF recognize financial institutions which are considered non-bank financial institutions. And these are institutions which provide financial services to their communities which the banks don't provide. Okay? And they fulfill a very valuable service to their communities as such, and they're recognized accordingly as non-bank financial institutions. Okay, so here's one we work with where you can convert your fiat currency into precious metals, let's just say gold or silver, and have a private account there. On one hand, where the trustee of the trust also has an account. We've covered this a little bit a moment ago. And the nice thing about this alleviates one of the biggest disadvantages that holding gold has had, and that is just simple liquidity. To try and convert gold to cash has always been very cumbersome if you're holding it physically, either directly or in a vault somewhere. In this particular non-bank financial institution, you could have holdings in gold and instantly access cash through a debit card or through a bank wire transfer to your bank if you need to access that cash. All the meanwhile, storing the value of the fiat currency in an asset that is likely to increase at best or hold its value at worst while the value of the fiat currency crashes around us with hyperinflation. All right, that's a fascinating and very useful tool. As you can see, this you can have a private account right alongside a trust account and swap back and forth. We can talk about that. Jim Rickards, you likely have heard of him if you follow financial pages at all. He was an analyst for both the NSA and the CIA. Economic analyst, and he's written several books. He's a prolific author and well known on the speaking circuits and financial circles. Look him up. You'll find a very interesting history. But just based on fundamental economic mathematical analysis tells us that gold should be anywhere from $10,000 to $50,000 per ounce. He's not the only one. Do a search on the internet. Do a Google search, $50,000 gold. And you'll see how many people are echoing the same sentiments just based on the value of debt that's circulating in this world, money supply, and fundamental issues like that. Gold has been suppressed for the simple reason that the central banks have been stockpiling gold by the ton. They're buying gold by the ton. Why would prices be suppressed? Well, if you're buying it by the ton, you want to get it at a low price. And you think that once the lid comes off of the suppression, you're going to be sitting on tons and tons and tons of gold when the price goes through the roof. Okay? Again, very fascinating research if you want to dig into that. Bitcoin, the same thing. They could talk about why and how Bitcoin could reach $50,000 or more, and that's coming from many different corners, people who are very well positioned to know. Okay? So these assets all stand to do very nicely. In the worst case scenario, again, they hold their value while everything else crumbles around us. So these are some of the things that we get into. I haven't mentioned the litigation of financing. That's a whole new industry that's evolved. Very interesting on that. And you can see more on some of these things, business development, in the links that I have for you here. All right, we'd like to help you with your privacy and prosperity. Let's start a conversation. Let's explore some of these avenues. But in the meantime, I can give you plenty of links to do some more research on the things that we do and things that you're going to want to know about, as the system and the world around us continues to fall apart. All right? So that being the case, take advantage of this free information. I encourage you. And ask me about the artificial intelligence arbitrage trading program. You can have that on your phone app in no time, making money for you. All right? Thanks for your attention, and I hope to speak with you personally in the very near future.